Hi, this is Charlie giving you Friday's video. No live trading today, I've been out and about a lot, but let's do a video on sentiment. So especially with regards to the pound here, I've got the pound dollar chart up, and we all know what's happened with the pound, so I don't need to say too much, obviously. But one thing I thought was interesting in going into the news as of yesterday is that I gave some levels. The levels were, there was something like a 66% probability that the pound would get up to 134.97 to the low end of the range. This is on the news. This is not relevant anymore, really, but on the news to 129.53. A 10% chance would have been to have got up above 136 or to 127. 70 or so, I think it was 127.70. So that was the potential for the move yesterday. And yet, thousands of traders around the world were shorting the pound, thinking the pound's going to come lower. Now, the one thing that you always have to bear in mind, and I was only just talking about this last night, is that novice traders, and when I call novice traders, they could still be people that have been trading for a few years if they've still got a novice mindset, but they'll go into an announcement, a big deal like the UK election. They'll go into that and put trades on and hold those trades through the election. And the problem with novice traders is they think about the profits that they could make rather than thinking about how much they could lose. Now, if you've put trades on and you've got guaranteed stops, something like that, fair enough, or an absolute limited downside, like maybe using options. But if you're just trading forex and you don't have something like guaranteed stops, which I'm not a massive fan of guaranteed stops, by the way. They're just a tool for market maker brokers to make more money out of you. But in a situation like this, they're quite useful. But otherwise, you're going to be susceptible if you've shorted the pound and you've held onto your short, and then it flew up 200 odd pips in a very short space of time yesterday. Then you're going to take a massive amount of slippage on your stop loss, and yet we see retail traders all around the world doing that type of thing. So I still find that absolutely fascinating, that people will think more about the money they can make rather than the losses that they can potentially incur, because you never know which way something like an election is going to go. Anyway, so the pound's had that spike up. What I wanted to talk about here is a little bit is a sentiment. So there was actually the majority, I say the majority, but if we come to the pound, we can see that 66% of retail traders trading the pound have been short. Okay, so the majority have been short on the pound. So no real surprise there, and it never ceases to amaze me that so much of the time, as soon as a market's going up, retail traders will be doing the opposite. Now, don't get me wrong, there are certainly good times to do the opposite. But as a general rule, when a market's going up, retail traders start shorting it. When a market's going down, retail traders are going long. And it's that I've talked about it so much, that core emotion, that core what's in our DNA, that we cannot help ourselves, that want to do the opposite to what the markets are doing so much of the time. I'm talking about a large percentage of the retail traders. I'm not talking about all retail traders, of course. And if I now move over, so that's the pound. If I now go over to the euro, for example, we've got an even higher number. So if I bring the euro figures back, we've got 70%, as you can see here. 70% of retail traders are short the euro. Only 30% are long. Net 30, a larger majority are short. So again, this is a market which has been going up, maybe not quite as strong as far as the price action as the pound, but it's still been going up, and yet again, you've got retail traders are short. So I would rather, in the main, be on the opposite side of what the majority of retail traders are doing most of the time. Don't get me wrong, there are times when the retail trading public are right. Now, you could even argue, well, yes, Charlie, but look at where the euro is right now. It's up against this prior high here. So isn't that a good place to maybe sell? Yes, and we're seeing, as I'm talking here this afternoon at 2:42 in the afternoon, um, we're seeing that the euro's giving back some of the gains that it made last night, but no real surprise there. But yes, there are times where the euro might even come off a little bit more yet over the next week or so and start to chop around. But put it into perspective. Those figures on the what the on the retail, they've not just got 670% short. They were net short from back down here. As soon as the euro started coming back, coming up here, they started to short. So they've been short for a while. So then they're underwater. So it's only any retail traders who have been shorting, since yesterday or today, who are actually making any money. The majority of those 70% are underwater. So again, you have to put that into perspective and see the what's going on behind those figures. And so incredible. So in the main, I tend to rather be on the opposite side to what retail are doing. Now, talking of the euro, let's just cover this one off while we're at here. Yeah, it's got this. It's come up into these price highs, broken them, so it's fairly natural to get a reaction because it's broken those highs. And then what happens is you do get sellers coming in, and you get professional sellers coming in here because there will be buy orders, people who are looking to buy breakouts. They'll be buying on the break, and then you'll have sellers wanting to sell into that. So it's quite a common occurrence to see this sort of thing. And talking of which, I've been asked to talk about buying breakouts. It's not something that I do a lot of, buying breakouts, but certainly there are times when I may want to buy a breakout rather than buying a pullback. And why is that? Why would I want to at times do that? Sometimes I just want a bit more confirmation before getting into a market, and so a breakout is more ideal than and just waiting for that break to come rather than getting in when the market's still lower. Yes, you get a better price, but there's not as much confirmation at that time. And a lot of it comes back down to multiple time frame analysis. I'm looking at stuff that's going on the weekly and monthly time frames to say, okay, if we can break that, what's going there on the daily, then that looks like it's going to be heading towards the levels I'm looking at on the weekly or monthly charts. So that's what I tend to do on breakouts. And also, if I'm already long, on a market, then I won't mind buying a breakout if I want to add to the position. Let's take the euro as an example. Then I wouldn't mind buying up here, knowing full well there's probably going to be sellers coming in, but it's not 100%, and it could just break and off it flies. So putting in a smaller position on the break, so I'm in a position overall, because for argument's sake, I've got in down here, so I'm in a decent position overall, and I'm just adding a smaller position to that on the break. If it flies, great, it's a bonus. If it wants to pull back, like here, and maybe it consolidates and then goes, well, at least I can still carry that, and it's not really affecting my overall positions too much. So that's the type of thing that I would do as far as buying breakouts are concerned. So most of the time when I'm trading, trends, I'm looking to buy pullbacks. So once a trend has developed, so a market is making a series of higher highs, higher lows, then I'm looking for pullbacks within that trend to then get long. So this is the old phrase, fade the short term in favor of the longer term. So if I feel that the longer term is the bigger picture is up, then any short-term weakness I will look to fade or do the opposite. So therefore buying pullbacks. That's the general rule there. Anyway, so I've done a few little bits there today. So what was I talking about? The pound and sentiment and buying breakouts. There you go. Have a wonderful weekend, and I'll catch you next week.